Welcome to the latest Motley Fool scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Tyler Crowe and Jason Hall giving a 1 to 10 rating to a REIT that specializes in medical use cannabis facilities. It's Innovative Industrial Properties, ticker symbol IIPR, maybe referring it to that for brevity. I guess innovative is a synonym for pot in this case. First, we'll rate the strength of the business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Both of you have 6s. What do you say, Tyler?
Congratulations to us for not filling this thing with a ton of dad puns about getting high and pot jokes. So, good for us on that. But look,
speak for yourself, Tyler. Hi.
It's early. Yeah, it's early. Look, I think industrial real estate is a great business. I own a lot of industrial real estate in my personal portfolio, and I can see why renting space to grow cannabis could be a good business. The thing that makes renting space to cannabis companies like IIPR does is that you're taking on a lot of counterparty credit risk, because these are businesses that need to kind of live outside the formal banking industry because of, it's not exactly 100% legal on the federal side.
No, it is 100% illegal on the federal side.
Yeah. So IIPR makes it work. But, unlike most real estate companies, they can't use leverage to juice returns and like most other real estate does, because it kind of has to accommodate for the riskier nature of its tenants and the risk of not paying.
Yeah. Without falling too much into the weeds of the real estate industry and the cannabis industry, I'm just not convinced that its moats are going to really remain moaty. I know that's a pretty technical term, but as we do see the industry continue to move towards more legalization at the federal level, this specialist that's been willing to take on that counterparty risk is going to have to just compete on all of the other things that industrial REITs will on a level playing field. It's worked great so far. I'm not convinced that that's going to continue to be the case.
Yeah, it's you would want there to be some sort of, like you said, a mode, a brand, something that carries you forward. That's something, my initial read, I'm like, oh, okay. Seems like a boring industry with a lot of risk. Great. Let's talk about management. Let's see if our tunes change. A 10 is Warren Buffett. A 1 is Homer Simpson. Jason's at a 7. Tyler, you're just at a 6.
Yeah. I think management's been a little more reactionary than what I would say is visionary. When everything cannabis on the market was all the rage and people were paying ridiculous prices for these stocks, they were willing to go on flat out growth mode. And you saw it in all the facilities they were bringing on, which also meant they had to take on questionable tenants and giving them favorable terms, like big discounts for make-ready expenses, because making grow farms in industrial warehouses costs a lot of money. Now that the market has put the stock and kind of the industry a little bit more out of favor, it's started to hunker down and focused on tenant diversity and steady cash flows. I like the pivot in the strategy. I just kind of wish they did that to start and didn't have to, change halfway to the point where they have a 11% dividend yield because the market doesn't like them anymore.
Yeah, I'm not convinced that there's much management could have done to change how the market favors cannabis related stocks right now. But I do agree with kind of the thread there of, it seems like there was a land grab growing, not by any cost, but empire building without maybe being more disciplined. Maybe has put the business in a bit of a weaker position. But the reason I gave it a 7 versus a 6 is one thing. There's no debt, but you have to fund growth somehow, and it certainly hasn't come from cash flows. So it's stock issuance has done that. I think they've done a relatively good job of issuing stock to fund growth when the stock was on the higher prices, and more importantly, not issuing a bunch of stock when the stock was cheap.
For financials, a 10 is a fortress. A 1 is yikes. Tyler's at an 8. Jason, you're at a 7.
Yeah, so I gave management a little bit of credit for their share issuance. I think is the timing of using secondaries and private placements to raise capital to fund so much of the property acquisition that they've gone through, I think was savvy. But it did come at the expense, and this is just since 2019. This is not since the IPO, but just since 2019, the share count has more than tripled. The good news, it's created per share value, free cash flow and operating cash flow growth, even on a per share basis, is up more than 5x over that same period. So that's a positive.
Yeah, I went with 8 because, like, again, in a vacuum for a REIT, its balance sheet is impeccable. But that is a product of, tenant creditworthiness and not being sure if you're going to get your next rent payment. You can't have a lot of debt obligations on the balance sheet if you aren't sure when you're going to get your next month rent. And it has slowed its dividend growth such that it can kind of maybe use some of those internal funds from operations for development and acquisition. Again, those are the right moves to make, but that's a product of not being able to use leverage like so many other real estate companies do. Like it's kind of strange how little debt is actually on this thing for a real estate investment trust.
Yeah, it's weird for a REIT. Profitability is like the numbers are actually interesting. It's that underlying risk that we're trying to evaluate here. So let's talk about valuation and risk, Tyler. How well will IIPR stock do over the next 5 years? And how safe is it? A 10 is a sure thing. A 1's a lottery ticket.
Well, I said 10 to 15 with a kind of a middling safety score of 7. The dividend yield today is 11.2%, which says either the market has kind of tossed this thing with all the cannabis stocks into the dustbin, or I'm missing something in the financials that will lead to a dividend cut. If it can maintain its current operations as it has, and even if there's no growth, that's an 11% annual total return just from the dividend alone. So, like, unless I'm really missing something here, it's a decent return just from a dividend alone.
Yeah, I tend to agree. My safety score is a little bit higher because I do think that strong balance sheet is a hedge against risk. And I do think a lot of the downside is kind of already priced in, thinking about valuation and also the yield. I'm less convinced about upside because of what could happen with its moat going up in smoke. I told you, Tyler, you had to give me time. I can get plenty of them in here. But I'm just not sure that moat's going to last over the long term. The other side of that coin is even if the moat goes away, guess what happens? You can start using debt and identifying credit-worthy businesses that may move into this space, whether that generates additional incremental value. They've been smart about equity issuance to raise capital. I'd like to think they'd be smart about using debt responsibly as well, if and when that does become a possibility. But again, I don't necessarily see this as being a massive market beater. But if you can get 10 to 15% total returns with the yield where it is already, that sets a really low floor, right, for anything additional. I mean, we're talking about the yield at 11%. Even if they just hold the dividend steady and the stock price goes down a little bit, you're going to do pretty well.
The numbers make it tempting, right? So top it, Tyler. Is there a company in this space you like more?
I'm going to focus on the real estate side rather than the cannabis side and like I said at the top, I own a lot of industrial real estate, and I'm a meat and potatoes kind of guy when it comes to industrial real estate, and maybe like venturing off into experimental real estate like cannabis, not my thing. Rexford Industrial Realty, Torrento Realty, or Prologis, I think are all great options in the industrial real estate space. And like if I had to pick one, I would pick one of those three. I own all three.
Yeah, and you're looking at a broad swath too, with a small, very geographically focused Rexford and Torrento, and then Prologis, one of the biggest REITs in the world on the other end. All are definitely compelling valuations. I'm going to reach the other direction though, and talk about a REIT that's actually on the higher end of its valuation range in recent years with CareTrust REIT. And I'm trying to not be crass here, but one of the things that makes it compelling to me, its focus has been seniors housing and nursing homes and long-term care facilities. But over the past few years, they've added addiction treatment facilities as a market that they're looking at. Now, that's paid by private insurance versus the other stuff that a lot of it is paid for by Medicare. So that diversification into a more profitable line that's a smaller niche is really compelling. I promise I'm not trying to put it out there just to be some weirdo opposite of a cannabis company because they have addiction treatment facilities in their mix, but I think it's worth looking at.
Thank you to both Jason and to Tyler. They've given innovative industrial properties an all right overall score of 6.7 out of 10. Similar scores for all the categories. More importantly, I think we got away with just like one pun, maybe two. Look out for a new scoreboard.
It was 5. Watch the replay. Watch the replay on it.
There you go. We'll see. The heart believes what the heart wants. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is CRISPR Therapeutics. Till then, Fool on. Oh, you know what? I thought I said 1 to 2 funny puns.
Oh,
that was good.
Oh,
That was good.